Hello, I'm Rob from Federal Finance CPE, and today we're diving into obligations in federal accounting. If you are wondering what an obligation is, hang in there, and by the end of our chat, you will know what they are and when to use them. Think of obligations as the government's financial promises. They tell us two critical things: whether we've received what we've paid for, and whether we've paid for what we've received. Understanding obligations is crucial for anyone working in federal finance. Today, we'll explore what they are, how they work, and why they matter. Let's take a look at what we'll cover in our chat about obligations. First, we'll start with the fundamentals. What exactly is an obligation? Then we'll explore obligation accounts. These are the specific U.S. Standard General Ledger accounts we use to track our financial promises in federal accounting. Next, we'll walk through the obligation lifecycle, seeing how these accounts flow and evolve from start to finish. Finally, we'll bring it all together with a fun case study. I love using case studies because they show how these concept works in real-world situations. Each section builds on the previous one, giving you a complete picture of how obligations work in federal accounting. And don't worry, I'll connect these concepts to practical examples throughout our discussion. Let's see how obligations fit into the bigger picture of federal budgetary accounting. Every federal dollar follows a process flow, and I want you to notice how it moves from top to bottom like a waterfall. It all starts with an appropriation. That's a law where Congress says, here's the money you can use for this specific purpose with these restrictions. This is your budget authority. Then we have apportionment, where the Office of Management and Budget, aka OMB, divides the appropriation money by time period and purpose. It's like saying you can use this much each quarter and that much on this program for the year. Next comes allotments. Now your agency is dividing and controlling the apportionment of money between different programs and offices of your agency, just like you might divide your household budget between different needs. After that, we reach commitment. This is when you're planning to spend money by setting aside funds for a purpose, like when you earmark funds to buy something but haven't yet clicked that purchase button yet. Finally, we get to obligation. This is where we focus today. Obligation is when you have a legal promise to pay, such as signing a contract or placing an order. See how each step builds on the previous ones? You can't have an obligation without all these other pieces. This flow is crucial because it helps agencies manage their fund and comply with the law. Now we get to our main topic. What exactly is an obligation? The formal definition is a definite commitment that creates a legal liability of the government for the payment of goods and services ordered or received. Let me break that down into simpler terms. An obligation happens when the government makes a legally binding promise to pay for something. Think about when you order something online. The moment you click Confirm Purchase, you've made a commitment to pay. That's essentially what an obligation is in federal accounting. But something fundamental to understanding here is that obligations aren't just about spending money. They're about tracking two crucial pieces of information. First, have we received what we ordered? And second, have we paid for it? For example, imagine your agency orders new computers. The moment you sign that purchase contract with your vendor, you've created an obligation. Even though you haven't received the computers yet and haven't paid for them, you've made a legal promise to pay when they arrive. The government must track this promise to ensure enough money to pay for those computers when the bill comes due is available. Let's look at 3 common types of obligations you'll see in federal accounting. These examples will help make the concept even more clear. First, we have contracts. This is probably the most straightforward type of obligation. When your agency signs a contract, maybe for IT services or building maintenance, you make a legal promise to pay for those services. When the contract is signed, you've created an obligation, even though the work hasn't started and no money has changed hands yet. Next, we have grant awards. Consider when your agency awards a grant to a research institution or state government. The moment you sign that grant agreement, you've created an obligation. The government has made a legally binding promise to provide that funding, even though the research project might not start for months. Finally, we have purchase card purchases. These are your day-to-day obligations, like ordering supplies or equipment. Remember what we talked about earlier with the computer example? That's a purchase obligation. As soon as you submit that purchase order, you've created an obligation, a promise to pay when those items arrive. There are more types of scenarios when an obligation might be created, such as contingent legal liabilities. Still, for our discussion, we will keep it simple with those earlier examples. Now that we understand obligations and some common examples, let's explore the specific accounts we can use to track them in the federal accounting system. In the following few slides, we'll look at the U.S. Standard General Ledger accounts that help us monitor both sides of an obligation, what we've received and what we've paid for. Think of these accounts as a sophisticated tracking system, much more detailed than a simple checkbook. These accounts help us answer important questions like, have we received what we ordered? Have we paid for what we received? And how much of our budget is needed for future payments? Let's get familiar with those 4 key U.S. Standard General Ledger accounts we use to track obligations. These accounts work together like a matrix to tell us a full story of our obligations. First, we have account 480100, undelivered orders, obligations, unpaid. Think of this as tracking promises where we're still waiting for delivery and payment. For example, when you sign that contract for training services, this is where that obligation lives. There isn't a proprietary entry with this because no activity or payments have occurred. Next is account 480200, undelivered orders, obligations, prepaid/advanced. This is for situations where we've paid for something upfront but haven't received it yet, like when you put down a deposit on a conference venue 6 months before the event. On the proprietary side of federal accounting, I would expect a prepaid asset such as 141000 advances and prepayments to be booked with 480200. Then there's account 490100, delivered orders, obligations, unpaid. This tracks items or services we've received but haven't yet paid for. Imagine when those office supplies arrive at your door, but the invoice is still being processed for payment. The proprietary entry here would be to create a payable such as 211000 or accounts payable. Finally, we have account 490200, delivered orders, obligations paid. This is our final destination, where we record fully complete obligations, meaning we've both received the goods or services and paid for them. With this entry, you should have recorded your goods or services received, record your payment, and have no more outstanding payables or existing assets. Now we're going to see these accounts in action. We're entering the most exciting part of our discussion, how obligations actually flow through these accounts over their life cycle. Think of it like tracking a package from when you order it until it's delivered and paid for. Just like you might check different statuses, such as ordered, confirmed, shipped, delivered, obligations have their own journey through our accounting system. Let's see how our 4 U.S. Standard General Ledger accounts work together in what I call the obligation matrix. This visual tool helps us understand how obligations can exist in different states. Look how this matrix is organized. On the horizontal axis, we have unpaid versus paid. On the vertical axis, we have undelivered versus delivered. This creates 4 distinct combinations, which each has its own account number. On the top left, we have 480100. This represents obligations for which we have not received anything and haven't paid anything yet. Think of this as your starting point for almost all obligations. The top right is 4802, where we've paid but haven't yet received anything. This is less common, but think about situations where you might make a deposit or prepayment. The bottom left shows 490100, where we've received what we ordered but haven't yet paid for it. This is like when those office supplies are sitting on your desk and the invoice is still being processed. We have everything we need, just haven't paid for it. Finally, at the bottom right, we have 4902. This is where our end goal is, where everything is delivered and paid for. Now comes the fun part. Put everything together that we've learned into action. Now comes the fun part. We'll put everything we've learned into action with a case study. We'll see how obligations move through our matrix using a scenario to clarify these concepts. I've chosen the situation where you're planning a concert as an example because it shows us multiple types of obligations happening at different times. This scenario will demonstrate how purchases, services, and deposits flow through our 4 U.S. Standard General Ledger obligation accounts. Here's where we start putting our obligation accounts into action. I've set up a blank matrix to help us track every financial move we make while planning this concert. You can see our familiar 4 accounts ready to go. 480100 and 480200 up top for our undelivered orders, and 490100 and 490200 below for our delivered orders. The empty stage you see on the left is about to become the site of our concert. Like in federal accounting, though, we'll need to make several commitments before the music starts playing. Let's track our first big obligation. We've just contracted with a venue and a band for $5,000. Watch how this appears on our matrix. Since we've signed the contract but haven't received any services yet, after all, the concert hasn't happened, this obligation starts in account 480100, our undelivered orders obligations unpaid. You see the $5,000 entered there in our matrix. Think about why this makes sense. We've made a legal commitment to pay, that's the obligation part. We haven't received the services yet, that's the undelivered part, and we haven't paid yet, that's unpaid. This is a classic example of how most obligations start our journey. This is a classic example of how most obligations start their journey. Now, something interesting happens. We're paying a $1,000 deposit for the venue. This single transaction affects 2 accounts in our matrix, and I'll show you exactly which ones and why. First, notice how we reduced the original $5,000 obligation in account 480100. We still have $4,000 in there, $5,000 minus our $1,000 deposit. But what happens to our $1,000? Since we've paid for it but haven't received the services yet, it has moved to account 4802, undelivered orders, obligations prepaid, advance. This is similar to when a federal agency makes a partial prepayment on a contract. The prepaid portion moves to 4802 while the unpaid portion remains in 4801. This split tracking helps agencies maintain accurate records on their paid and unpaid commitments. Now, we've gone to the county permit office and paid for the necessary permits for our concert, which costs $300. Watch where this $300 moves in our matrix. Since we immediately received the permit and paid for it, this obligation jumps straight to the account 490200, Delivered Orders Obligations Paid. This differs from our venue deposit because we got what we paid for immediately. Looking at our matrix now, we can quickly answer important questions. How much have we committed to pay yet have not received? The answer is $3,700. How much have we prepaid so far? It's $1,000. How much have we fully paid? Or how much is fully complete, such as received and paid? That's $300. Here's where things get interesting now. The concert is happening. This means the services we've been waiting for have finally been delivered. Watch how this delivery triggers several movements in our matrix. Remember that $3,700 sitting in account 4801, undelivered and unpaid? Now that the concert has happened, that amount moves to account 4901, Delivered Orders, Obligations, Unpaid. This makes perfect sense because we've received a service but haven't paid the final bill. The $1,000 deposit we made earlier, which was in 480200, also needs to move. Since we've received those services, that amount shifts to account 490200, Delivered Orders, Obligations Paid. Think about why. We paid this portion already, and now we've received for what we paid for. Here's our final step. We're paying the remaining $3,700 invoice, which shows the power of our obligation tracking system. Let's see what happens in our matrix now. That $3,700 sitting in account 4901, delivered but unpaid, now moves to its final destination. Account 490200, Delivered Orders, Obligations Paid. Look at our matrix now. We can see a complete story of our concert. Let's do a quick sum to confirm all our dollars are accounted for. In 4902, we have $300 for permits, $1,000 from our initial deposit, and $3,700 from our final payment. This gives us a total of $5,000, which matches our original obligation in 4801. Let's take a moment to understand the completed state of our transaction matrix. It provides insight into how obligations look when they're fully settled.
At the very top of our matrix, we see zeros across the board in accounts 480100 and 480200 are undelivered accounts. This tells us an important story. No outstanding services or goods are awaiting to be delivered. Every obligation we created has been fulfilled.
Looking at the bottom row in accounts 490100 and 490200, we can trace the final resting place of all our funds. Account 490100 shows $0 balance, meaning we have no unpaid bills. In 490200, we see a total of $5,000, representing every dollar that was both delivered and paid for our concert. Today we've journeyed through federal obligation accounting, using a concert planning scenario to understand how these accounts work. We started with the basic concept of an obligation, a legal commitment to pay, and built up to seeing how obligations flow through different accounts as they progress from that initial commitment to final payment. Our concert example showed how the U.S. Standard General Ledger accounts work together as a comprehensive tracking system. We learned that account 480100 catches our initial commitments to pay, 490200 handles our prepayments, 490100 tracks what we've received but not paid for, and 490200 shows us what has been fully complete, which is delivered and paid. Most importantly, we've seen how these accounts help answer two critical questions that drive federal accounting. Have we received what we ordered? And have we paid for what we received? Those interested in learning more about federal accounting topics can visit Federal Finance CPE's website at federalfinancecpe.com. As you see, this training is brought to you by Persons Consulting, LLC, a service-disabled, veteran-owned small business specialized in federal accounting and financial management. Thank you, and have a great day.